Good afternoon, everyone. Actually, afternoon for some, still morning for us on the West Coast. This is the weekend update, and yeah, it's been a crazy week. Of course, the war in Iran. We're going to start off, as we should, with the chart of the USO oil. United States Oil Fund. This is usually the one I've tracked over the years. We had a huge pop this past week. We actually started making some records. I believe this was the largest increase since 1983, 35% increase in the price of oil in this last few days, and does not look like it's going to stop anytime soon. But with that in mind, I posted something in the chat room from the Kubisi letter on Friday, which, I mean, it is still kind of remarkable that this is the lowest volatility we've had in years as well. Something is going to give. Whenever you see that kind of tight volatility, what we tend to see is a huge move. Whether it's up or down is, of course, going to depend on the headlines. And this is the kind of environment where people who are solidly short or solidly long could get burned both ways. We could see both sides in the course of a couple of hours, just depending on the headlines, get whiplash left and right. So this is a market to be very tight on your positions, keep good stops, and just play the momentum. Now, as is always the case, whenever we have some sort of crises, the small stocks wake up, and this is something we've been looking forward to. We'll get to some plays here in a little bit. Let's look at the VIX here. VIX is this is the weekly chart of the VIX. We're about to break a key level, and usually when we see the VIX spike up to that 40 to 60 level, that is an indication of a near-term top. We're far from that right now. We broke 30. There's a lot of hesitation out there, and shorts have been emboldened really for the last year, and more so now. We're seeing some of the large caps starting to get taken to the woodshed. We're seeing small stocks wake up, and we're seeing momentum. Now, that is great. One of the things that have been very lacking for us as small cap traders over the last year, and especially this year, to start the year off, is the lack of momentum, the lack of sector and peer action. But the war has driven that. We've got oil and defense stocks taking the lead right now. And the great thing, I'm saying that regards to momentum and small cap trading, is that when you start to see sectors wake up, like oil and energy stocks, defensive stocks, once you start to get a couple of sectors waking up, that tends to build on itself. And that's something that's been very lacking for the last year. So I'm very positive for the kinds of stocks that we trade. I'm going to go over some large cap stocks here. APP, this one, huge rally after the short attack last month, but it's in a key resistance level here. And everything says we could pull back. Now, if they're actually able to break this 50 and 200-day moving average this week, this one could see a pretty quick squeeze back to 600. And that goes along the lines where I said, this is a market that shorts can get burned just as well as longs. But this one looks like it could put in a retrace this week. I'm going to be interested to see what this one does. The surprising one to me is Tesla. Tesla, energy stocks, EV stocks, this is the next sector I think should wake up, the alternative energy plays, as gas prices really haven't, they've skyrocketed, but nothing compared to what we've seen in past years. I think the gouging is going to start coming this week with the gas prices, so get ready for that shock. And, this has been a market, and I've said it many times in the chat room over the last few months, that are reminding me a lot like 2007 and 2008, where we had mega caps doing all the heavy lifting. It was pretty dead throughout the rest of the market. And then a mega spike in gas prices is what eventually knocked the house of cards over. And you saw what happened in '08. Something similar could be setting up here right now. This gas price shock could put a scare into a lot of things, and we're going to see where that goes. But Tesla here, pretty strong weekly support here. As gas prices go up, we're going to start talking about EVs again, I think, and Tesla should be a big beneficiary of that. If we look at the daily chart as well, kind of hanging around the 200-day moving average on the daily. So this is one where we could see, especially if they're selling in the other leaders in the tech sector, I could see Tesla starting to get some safe haven money. Bitcoin, we mentioned on the last couple of videos how this has been a formation that has failed many, many times. It had a nice pop up to the 50-day moving average, and now we're heading down lower. This is going to be one to really watch this week, because if they're able to breach that 60K level, we could see 50 and a scare drop to the 40s before we head back up. So that's just something to keep in mind there. Qs, this is the weekly chart. I mean, keep in mind, guys, volatility has been very tight, as I mentioned at the start of the video, but we're also not too far from all-time highs with a gas price and energy shock hitting the market. And, you know, the handful of mega caps that have been holding up the market, we could see some panic enter on some of these large caps. So that's something to keep a close eye on here. The Qs, we look at the daily chart as well. We've just been going back in this range, but we were not able to breach that double top recent high. Unless we get some positive change, you know, a deal, you know, Iran caves or something like that, we could be looking at a pretty nasty sell-off this week. But again, headline risk does exist for both longs and shorts, so also keep that in mind. Take I've been saying it over and over again, a flavor of the day approach, and swings, keeping them tight, keeping them small, and playing whatever the action is each day, and then playing some of these hot sector plays. The second we get some sort of deal announced, you're going to see a dramatic sell-off in these oil stocks. But until then, those are probably going to be the leaders. And actually, let's look at a couple of laggard oil stocks. This is OLOX. And, you know, it's funny when you look around on X, a lot of people are, how is this an oil stock? Because they look at the old profiles. This stock merged with an oil company. You know, they're pumping out oil. Doesn't matter how many barrels. It's a legit oil company with sales. Breakout right now. We're looking at the daily chart. The real chasing will come on the break and close over this 50-day moving average at 139. Seeing what some of the other trash, junky, dilution, small cap oilers have done. This is a cheap one. I could see people really bull running this one up like T-Pit to the twos this week. You know, if you're looking for tight stops, they keep dipping it down to that 108, 110 level. You know, if you've got some risk tolerance, you could be willing to give up 20 cents on the downside to possibly make $1 or more on the upside on this chart. The other one I'm going to mention is BRN. Now, this is a stock that trades on Scamex. That is my name for probably an indice, in my opinion, that is more crooked than the OTC, you know, the pink sheets, et cetera, et cetera. This stock, heavily gamed. It is a legit oil company. They pump out, I mean, I think looking at the research I sent out on Friday, 950 barrels of oil a day, 15 million market cap, less than some of the big oilers that are moving that have almost no revenue. This stock usually has a run, but it's heavily manipulated. 140 and a big volume day. This stock's probably going to need a 10, 20 million volume day to blow the specialists out of the water. And a potential magnet up here is the $2 level. At least on this manipulated stock, you know what your downside risk is. You know, you're looking at maybe one should be pretty strong support in this environment, even 90 cents, but you could be looking at, a 50 to 100% potential upside is how I look at these plays when I'm taking small swing positions home. UAVs, drones, etc. And of course, we got to play UAVS. I mean, the stock that was a monster for us during the last small cap mania, UAVS, 200-day moving average, 150. A lot of articles out this weekend about the Defense Department, and, you know, it's costing us a lot of money to blow up these Iranian drones. The Department of Defense is looking for cheap alternatives. This is a stock that should benefit, and one that absolutely should benefit here is WRAP. They have the ability to deliver current production 18 to 20,000 of their drones a month and could go up to 75,000. This stock is sitting at the lows, and this environment is kind of crazy to me. This is another one. When we start to see volume on these, like we see on these manipulated stocks, usually the ones that they run right now with those 50, 100 billion shares, they're getting ready to print paper. At least on these ones, they haven't had the volume yet. When the volume really comes in and the big moves come, you know it's there. Right now, $2 in this environment, sitting at the lows. I've seen worse, crappy stocks do better. over the years. Quick mention on MOBX. This was our 575% winner from last week. Got some defense orders. Keeps chilling up here. I don't care what this one does right now. My profits are in my pocket. I got some whatever in case it gets crazy shares right now. I'll probably just sit on those unless it breaks 75 cents. And even then, boohoo, I'm only up 300 or 400% on that free position. But this one still, defense stocks, you cannot turn your nose up at them. Speaking of defense, got to mention SOAR, SOAR, critical materials play. Ex-U.S. Army dude is running the company. They had a PR recently where they're importing stuff that is used by defense contractors. 50-day moving average at 53 cents. This is similar to SGN. We could get merger news anytime. If this company's anyway smart, they should put out some sort of PR this week, and then we'll really see the volume pour into these. What these stocks need to get rid of the nonsense we see with NIXX shorting out there is, these 50, 100 million volume days to blow them out of the water. And then the last one I'm going to mention, this is a swing play. Nice little bottom here, NIXX. Maybe we'll get a PR with some good sales numbers. 50-day moving average, 76 cents. That's it for the video, guys. It's going to be a very interesting week this week for many traders, especially newbies who've not gone through times like this. Probably the best trade for you is to sit on your hands. Everyone else, play small, keep tight stops. But these are the kinds of crises market that wake up the kinds of stocks I like to trade. Enjoy the rest of your weekend, guys, and I will see you all in the chat room tomorrow. Bye.